Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex market. So yesterday we've got the statement from the Fed. The January meeting is passed, and actually this important statement was actually Jerome Powell said that in a situation when the inflation stands even worse than it was in December, this is a very important signal. He confirmed in general thing that widely expected that Fed will start change the rate in March, but still investors have some concern about the pace of the rate change. And as you know, and as we said, and as we discussed in our weekly report, some investors suggest that it might be faster rate change, not for 25 points, for example, but for 50 points. This is the first moment. Second moment, the quantitative tightening that should start somewhere near the first rate hike could change the volume, monthly selling and reducing of the balance sheet of the Fed. So currently it suggests it should be around 8 billion per week, but it might be greater. And this also make negative impact on interest rates because Fed will just throw on the market on the secondary market, a lot of bonds, which is make the offer and supply greater and should make impact on the interest rate change. Once we have discussed the impact of this possible quantitative tightening on the market, supposedly it could lead to additional 0.5% change of the interest rates, approximately, in the United States. This is what about the financial background. Speaking on the geopolitics, you probably know by yourself that as tensions still stand around Eastern Europe and NATO and rejects the offerings from the Russia and the same in the United States. And currently everybody watch what Vladimir Putin will do next. So currently the ball on the side of the Russia, so they need to make the next step. But in general, if you're tracking the political discussions inside the United States, supposedly it might be, difficult decision for Joe Biden, whatever decision he make. If, for example, the United States would accept the offer, he will be accused in a weakness. He betrayed the interest of the United States and switched the back pedal and so on, and capitulates against Russia. When the NATO and the United States rejects the offers, and Putin currently is coming to China on the opening of the Olympic Games, he was invited to visit the Olympic Games, and definitely he will talk with Xi Jinping, which also could put Biden under the critics of its rivals, political rivals, and first of all these Republicans, who said that Joe Biden has pushed the Putin to the ally with the China. So whatever Biden will do, it's in any decision he will be criticized. And this is, really a tough moment for domestic political situation in the United States. But this is already a bit thin games, tricky games, a lot of nuances around it. For us, the major conclusion is that since the market hasn't got any relief in the geopolitical tensions, that should provide more support to the United States dollar. So, and in general, returning back to discussion of the euro currency, everything, guys, actually nothing surprised has happened. So this is totally agrees with our long-term view, as we said that we treat these pullbacks and just retracement. It was just question how far this retracement could go, how far euro currency could climb. First, the market hits OP. We just were checking for the signals whether the market will try or whether it will show any bullish signs that could let us to make a bet on the possible upward continuation. So actually how we have passed through all this trade with this retracement this is very accurate journey. So because the market, when it was showing the good bullish signals, we're stepping in. When the market hasn't shown anything, we're just waiting. So you can see our suggestion, this is our recent 3-drive pattern failed. We said stay aside from any long position. This is not normal price behavior. Be prepared for a collapse. So that has happened. Currently, in the longer term perspective, the next target on the weekly chart will be around 108, 110, where EUR/LP would support one stance. Currently, market is not at oversold, and it means that market should challenge the lows relatively soon. So it's just a question of maybe a few sessions, because it keep going lower. So in the current circumstances, definitely we're not considering taking any long position. Speaking on the nearest standing target, if you'll take a look at the 4-time-frame chart on the downward action, the first target that market could reach will be this a bit extended ABCD with the OP around 112, which is very close to the previous low. So here some consolidation might happen. And if you intend to take the short position, you could watch for bounce up from this area. So maybe minor bounce will happen. Maybe you could try to catch some bread butter sell on the hourly chart or something of that sort. In general, the euro has the feature when it starts some motion, starts some action, it usually shows very small retracements. So it's just going and going and going, very small pullback if even it hits the oversold area. That's just the feature of the euro currency. It could consolidate for a long time in some range, but once range is broken, it's usually is moving more or less straightforward. So on the hourly chart, here is a great example again on the modern market that potentially bullish patterns also might be broken down. So potential wedge, which is potentially usually treated as a bullish pattern, it has been broken, acceleration on a background of the meeting, in the Fed meeting. Currently, guys, a few levels to keep an eye on. Probably they will drift slightly lower as market will move into the 112. But the first level will be 1240. This agrees with the lower border of the consolidation. I suspect that probably if retracement happens, the most probable the market will retest just the broken trend line here. Chances that it will return back inside of the consolidation right now seems not very high. But anyway, if this will happen, the next level to watch for will be retesting of the previous lows, and take a look, here also stands the confluence around 1265 area. So that's two levels probably will become the ones where euro potentially could turn down again and keep going to challenge the lows, and maybe it starts action to target that we have on the weekly chart.